Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how to grow a small account very quickly. If you're working a regular 9 to 5 and you're trying to get away from it and you're new to options, trying to use options to supplement your income even further, then you just happen to stumble onto the right video. What I want you to do right now is focus on, and let's get into it. Welcome to Investment Gains. Let's jump right in. So for today's video, I'm going to give you a step-by-step walkthrough of how I personally grew my account using $300 only. I will show you the strategies I use. I will show you the risk I took. And I'll also show you what helped me grow my account exponentially. If that sounds like something that you're interested in, then my name is Tim. Welcome to Investment Gains. On this channel, I show you how I use my portfolio in order to make consistent income. And you could probably do the same thing too if you were to follow the strategies. Forget about the stocks. Forget about the other videos you've seen. Focus on the strategies and perfecting the strategies. Now, investing, like everything else, you're gonna lose money. In fact, it's guaranteed you're gonna lose money. So get your mindset right. It's gonna happen sooner or later. Once that happens, then you're a real trader. So we're going to assume that we're going to be growing our small account using $300 as I did. So we're going to use the Spider ETF SPY. So this is how I did it. And like I said, I'm going to give you a step-by-step walkthrough. So let's go ahead. We're going to go to Trade SPY options. Now I'm going to go to sell and I'm going to go to put. Now I'm using the SPY. The reason I'm using the SPY is that because you're trading with a small account, you need to use these option strategies on ETFs in order for it to be safe and consistent. These option strategies also work on any stock. But the reason why you focus in on this channel is because you want to grow your account safely and consistently over time. So the other reason we're going to use the SPY ETF is because the Spider ETF has multiple trading days per week. But what we're going to focus on doing this trade only twice a week. That means you could put on your trade and get back to work without having to worry about trading. So we're going to go ahead and we're going to choose our strike date. Firstly, we're going to use January 15, which gives us 4 days. Now we're going to go ahead and we're going to choose our strike price. The strike price I'm going to be going with is going to be a strike price right below the current share price. And I'm going to be looking for an 80% chance of profitability or higher. So for the first leg of this option strategy, I'm going to be going with the 568 strike price. And that gives me an 87% chance of profitability. Not only that, because I'm selling a put, I'm going to be receiving some premium. The sure way for you to grow your small accounts portfolio over time is to make sure you get consistent premium. Now, remember, we're pretending that we have $300 only in our account. So, nextly, we're going to go ahead, we're going to jump over to buy and put, and we're going to use the exact same strike date. This time, we're going to choose our strike price just a bit lower, right below our previous strike price, and that's going to give us the 567. In this instance, we're going to be buying. So now we're going to have to make a payment. The payment we're going to have to make is 0.76. Now, the difference between your sell price and your buy price, that's what's going to be known as your premium. That premium goes into your trading account right away, and that's yours to do whatever you want with. Step number 1 to growing your small account is to make consistent premium. So now we're going to go ahead, we're going to hit continue. We're going to hit review order, and I'm going to explain to you how this works. Now, for your first trade, you're only going to use $100 of your $300 portfolio. The returns you're going to be getting, which is going to be options premium, is going to be about $12. That is it. That's the strategy right now. Stay to the end of the video. I'm going to show you how to put a stop loss on this if you're going back to work for your regular 9 to 5. Now, we're going to go ahead. We're going to get out of this. And I'm going to show you trade number 2, what you're going to be doing with your second $100. So $100 number 1 is down. You receive $12. Now, all you need to do is wait for the contract to expire, and then you make a decision based off of that. Now, if you guys are getting any value in this video, now is a good time for you to go ahead, like the video, subscribe to the channel, and turn that notification bell on. That allows you to get an alert whenever I post a video. Now, also, if you guys are interested in any of these trades we do here, and you're interested in becoming part of the weekly income team, then go ahead and subscribe. It's going to be the first link below. Now let's go ahead and use our second $100. So once again, we're going to go to sell and we're going to go to put. Now this time we're going to switch up our strike date. We're going to be going with January 17th. Now $100 has already been exercised. Now we're going to go ahead and use the second $100 and we're going to be doing the exact same strategy. We're going to be looking for a chance of profitability of above 80% once again. Now we're going to be going with the 568 once again. You don't have to use the 568. Anything above the 80% chance of profitability that you're comfortable with, feel free to go ahead and use it. Now, once again, we're selling, so we're going to receive some kind of premium, and that's going to be $1.60. In the option world, $1.60 is going to equate to $160. As you well know, each option contract is multiplied by 100 shares. So $1.60 multiplied by 100 shares is going to give you $160. We're going to jump over to buy and put once again while maintaining the exact same strike date. And once again, we're going to choose our strike price right below our previous strike price, which gives us the 567. We're going to be buying once again. So now we're going to go ahead and select this one right here, and we're going to have to make a payment. The payment we're going to have to make is going to be $1.46. Once again, we're going to be receiving a second premium. The second premium we're going to be receiving is $16. So now you have $16 plus you initially made $12. That's give us around $28. When doing this option strategy, the sweet spot should be making around $25 on a weekly basis. So here goes our second $100. So the first $100 you made 12, your second $100 you make 16. I know you want to know what you're going to do with the third $100, but bear with me, I'll let you know what to do. Now, this is all you need to do in order to grow your small account portfolio. After you do these option strategy, which is known as a put credit spread, you're simply going to go back into it, especially if you're trading for Robinhood. Robinhood is going to give you an option once you open up the contract. The option is going to be if you want to close the position. You simply hit close and then you choose the price right here that you want to choose to close the option strategy. Once you put that price in, whenever your option strategy is hit on that price, then the option is executed. So that way, when you're at work, you don't need to worry. Now, the other $100 you have, you're going to keep it in your portfolio. So first $100, you choose one strike date. Second $100, you choose a third strike date. The third $100 you keep in your portfolio. The reason you keep it in your portfolio is, like I said, eventually this trade is going to go against you and you're going to need to have that kind of capital in order for you to continue this option strategy. Now, in order for you to grow your small account exponentially, this is what you do. This is what I did personally. In addition to me making about $20 to $25 on a weekly basis while still maintaining my 9-to-5 job, I also contributed $25 from my 9-to-5 pay. What that did is that allowed me to make between $50 on a weekly basis. If you have a $300 account and you keep trading and making $50 on a regular basis, within about 6 weeks, you should be able to double your small account. Do not worry about the small numbers. Worry about consistency and worry about growing your account by however little it is. You're in this for the long run. That's why we focus on option strategies where you receive a premium and option strategies where you're able to make some kind of consistent income. Once again, before you enter any options trade, make sure you do your own due diligence and also make sure you always have an exit strategy. If you guys would like me to do a small account options challenge and show you how to grow a $300 account and double it in less than 3 months, let me know in the comments below. I would be happy to show you it step by step. Anything to help my subscribers. Now, if you guys got any value from this video and you guys are interested in growing your small account week over week, just like I demonstrated right here, go ahead and subscribe to the first link below. And if you have any questions concerning this option strategy and any other option strategies I've mentioned on this video, let me know in the comments below. And until the next video, keep growing your small account portfolio.